What's up everybody, it's Hake, and let me tell you, there's nothing more exciting than watching your money grow in the stock market. But here's the thing, you don't need a ton of cash to get started. In this video, I'm going to show you how to turn just $5,000 into serious wealth. We're diving deep into the strategies I used to build my own portfolio, and trust me, these are the secrets nobody tells you about. We're talking about finding the right stocks, managing your risk like a pro, and most importantly, making your money work for you. Whether you're brand new to trading or you've been dabbling for a while, this video is your roadmap to financial freedom. So buckle up, hit that subscribe button, and get ready to transform your $5,000 into something truly amazing. Before you even think about dropping a single dollar into the stock market, you absolutely have to understand the basics. Think of it like this. You wouldn't buy a house without understanding how a mortgage works, right? So, what exactly is the stock market? In simple terms, it's a place where buyers and sellers come together to trade pieces of companies, also known as stocks or shares. When you buy a stock, you're essentially buying a tiny ownership stake in that company. And just like any other market, the price of a stock goes up when there's more demand than supply, and it goes down when there are more sellers than buyers. Now you might be wondering, how do I actually buy and sell these stocks? That's where brokerage accounts come in. These are like your gateway to the stock market. You'll need to open an account with a brokerage firm, and there are tons of them out there, each with their own pros and cons. But don't worry, we'll cover that in more detail later on. Once you've got your brokerage account set up, you can start buying and selling stocks. Remember, investing in the stock market is a marathon, not a sprint. Alright, now that you understand the basics of the stock market, it's time to choose your weapon, your brokerage account. This is where you'll be spending most of your time as an investor, so you want to make sure you choose one that's right for you. The good news is that there are tons of great options out there, especially for beginners. Some of the most popular ones include Robinhood, E*Trade, TD Ameritrade, and Webull. Each of these platforms has its own strengths and weaknesses, so it's important to do your research and compare them before making a decision. For example, Robinhood is known for its user-friendly interface and commission-free trades, which makes it a great option for beginners who are just starting out. E*Trade, on the other hand, offers a wider range of investment options, including options trading and international stocks, which might be more appealing to experienced investors. TD Ameritrade is another popular choice, known for its comprehensive research tools and educational resources. And if you're looking for a platform with advanced charting capabilities and real-time market data, Webull is definitely worth checking out. When choosing a brokerage account, there are a few key factors to consider. First, you'll want to look at the fees they charge. Most brokers charge commissions for trades, which can eat into your profits. Choosing the right brokerage account is a crucial step in your investing journey. Now let's talk strategy. You might be thinking, can I really make a significant return with just $5,000? And the answer is absolutely. But you need the right strategy. One popular approach for smaller accounts is swing trading. This involves holding stocks for a few days to a few weeks, aiming to capitalize on short-term price swings. Another strategy is dividend investing. This involves buying stocks of companies that pay out a portion of their profits to shareholders as dividends. Then there's growth stock investing. This involves investing in companies that are expected to grow at an above-average rate. The key is to find a strategy that aligns with your risk tolerance, your investment goals, and the amount of time you're willing to dedicate to managing your portfolio. Don't be afraid to experiment with different strategies and see what works best for you. Building wealth takes time, but with the right strategy and a little bit of effort, you can turn your $5,000 into something truly special. Okay, so you've got your brokerage account, you've chosen your strategy, now comes the exciting part, picking your stocks. But with thousands of companies to choose from, how do you find the winners? Well, it starts with research. Don't just blindly follow the hype or listen to what some random person on the internet tells you. You need to understand the businesses you're investing in. One of the most powerful tools at your disposal is a stock screener. This allows you to filter stocks based on specific criteria like industry, market cap, price-to-earnings ratio, and more. Once you've narrowed down your list, it's time to dig deeper. Look at the company's financials, read their earnings reports, and pay attention to their management team. Are they profitable? Are they growing their revenue? Do they have a solid track record? Another crucial aspect is understanding the industry the company operates in. Is it a growing industry? Is the company a leader in its space? What are the potential risks and opportunities? Remember, investing is like dating. You don't just marry the first person you meet. Diversify your portfolio by investing in a mix of different stocks across different industries. Now let's talk about the not-so-sexy but absolutely crucial aspect of investing: risk management. Remember, it's not just about how much money you can make, it's also about how much you can afford to lose. One of the biggest mistakes new investors make is putting all their money into one stock or one sector. If that investment goes south, they risk losing everything. That's why diversification is so important. Another crucial risk management tool is setting stop-loss orders. This involves setting a predetermined price at which you'll automatically sell a stock if it starts to drop. Position sizing is another important concept. This refers to the size of your position in a particular stock relative to your overall portfolio. Remember, the stock market is inherently volatile. There will be ups and downs, and it's impossible to predict every move. Stick to your plan, manage your risk, and you'll be well on your way to building long-term wealth. Now let's talk about one of the most powerful forces in investing: compound growth. This is the concept of earning returns on your returns, and it's the key to building wealth over the long term. Think of it like a snowball rolling down a hill. As it rolls, it picks up more snow, getting bigger and bigger. The same principle applies to your investments. As you reinvest your profits, those profits generate more profits, and so on. Let's say you invest $5,000 and earn a 10% return in the first year. You now have $5,500. If you reinvest that $500 profit and earn another 10% the following year, you're now earning a 10% return on $5,500, not just your original $5,000. Even small, consistent returns can add up to significant gains over the long term. By understanding the power of compound growth and reinvesting your profits, you're setting yourself up for long-term financial success. Congratulations! You've been diligently growing your $5,000, learning the ropes and managing your risk like a pro. Now, it's time to level up your investing game by scaling up and diversifying your portfolio. Remember those brokerage accounts we talked about? Well, they often offer more than just individual stocks. You can explore exchange-traded funds or ETFs, which are like baskets of stocks tracking a specific index, sector, or theme. They offer instant diversification and can be a great addition to any portfolio. Next up, we have the world of cryptocurrencies. While volatile, they offer the potential for high returns and can be a small but exciting part of your diversified portfolio. And for those seeking more advanced strategies, options trading might be on your radar. Options contracts give you the right, but not the obligation, to buy or sell an asset at a specific price by a certain date. Diversifying beyond stocks is not just about chasing higher returns, it's about spreading your risk across different asset classes. Continuously educate yourself, explore new strategies, and adapt your approach as needed. Now, let's talk about some common mistakes new traders make, because let's face it, we've all been there. Avoiding these pitfalls can save you a lot of money and heartache down the road. Mistake number 1, overtrading. It's easy to get caught up in the excitement of the market and feel like you need to be making trades all the time. But remember, sometimes the best thing you can do is nothing at all. Don't trade just for the sake of trading. Have a plan and stick to it. Mistake number 2, ignoring risk management. Don't let greed cloud your judgment. Set stop-loss orders, diversify your portfolio, and never invest more than you can afford to lose. Mistake number 3, FOMO trading, or fear of missing out. Stick to your strategy, do your research, and don't let emotions dictate your investment decisions. So there you have it. Everything you need to know to turn $5,000 into serious wealth. We've covered the basics of the stock market, choosing the right brokerage account, smart trading strategies, finding winning stocks, managing risk like a pro, the power of compound growth, diversifying your investments, and avoiding common mistakes. Now it's time to take action. Don't let this information go to waste. Open up that brokerage account, start researching stocks, and begin your journey to financial freedom. Remember, the best time to start investing was yesterday. The second best time is today. So, what are you waiting for? Get out there and make it happen. Look, I get it. Starting with just $5,000 can seem daunting, but trust me, it's completely possible to build real wealth from there. The key is to be smart, be consistent, and never stop learning. This video is just the tip of the iceberg. There's a whole world of investing knowledge out there, and I'm here to guide you every step of the way. Make sure you subscribe and hit that notification bell so you don't miss out on any of my future videos. Get out there, invest smart, and I'll see you at the top.